Have you ever wondered why everyone seems to be moving to Florida and how you could potentially profit from this massive migration? By the end of this video, you'll understand exactly why Florida's real estate market is exploding and how complete beginners can start building wealth in the Sunshine State even if you've never invested in property before. I'm going to share something that might shock you. While most people think Florida real estate is too expensive or too risky, the data tells a completely different story. Last year alone, Florida gained over 350,000 new residents. And here's the kicker. This trend isn't slowing down anytime soon. But before we dive into the goldmine of opportunities waiting for you, let me ask you this question that could change your financial future. What if I told you that some of the most successful real estate investors started with absolutely zero experience in Florida's market? Let me paint you a picture of what's really happening in Florida right now. Every single day, approximately 1,000 people pack up their lives and move to Florida. That's not just a number. That's a massive wave of demand hitting the real estate market like a tsunami. But here's what most people don't realize. This migration pattern is creating opportunities that smart investors are capitalizing on right now. The Florida real estate market isn't just hot, it's fundamentally different from anywhere else in the country. Unlike markets that rise and fall with economic cycles, Florida has what economists call structural demand drivers. These are long-term factors that keep pushing people toward the state, regardless of short-term economic conditions. Think about it this way. Florida offers zero state income tax, which means if you're making six figures in New York or California, you could potentially save tens of thousands of dollars every year just by changing your address. For high earners, this tax advantage alone makes the move financially compelling, even if they pay slightly more for housing. But taxation is just the beginning of Florida's appeal. The state has transformed itself into a business-friendly environment that's attracting major corporations at an unprecedented rate. Companies like Goldman Sachs, Citadel, and dozens of tech firms have relocated significant operations to Florida, bringing thousands of high-paying jobs with them. When major employers move to an area, housing demand follows, and that creates opportunity for real estate investors. Weather plays a crucial role too, but not in the way most people think. Yes, Florida has sunshine and beaches, but more importantly, it has become a year-round destination for remote workers. The pandemic fundamentally changed how and where people work, and Florida positioned itself perfectly to capture this trend. When your office can be anywhere with good internet, why not choose somewhere with great weather and low taxes? Now, let's talk about the demographic shift that's driving long-term demand. Baby boomers are retiring at a rate of about 10,000 people per day nationwide, and a significant percentage of them are choosing Florida as their retirement destination. This isn't a temporary trend. It's a demographic wave that will continue for the next 2 decades. Retirees bring purchasing power. They often buy with cash, and they're looking for specific types of properties that smart investors can provide. But here's where it gets really interesting for beginners. You don't need hundreds of thousands of dollars to start investing in Florida real estate. The key is understanding that the Florida market isn't just Miami and Orlando. There are emerging markets throughout the state where property values are still reasonable, but growth potential is enormous. Consider cities like Tampa, Jacksonville, Fort Lauderdale, and emerging markets like Cape Coral, Port St. Lucie, and Lakeland. These areas are experiencing rapid population growth, job creation, and infrastructure development. But property prices haven't reached the levels of more established markets. This creates what investors call the sweet spot, areas with strong fundamentals but accessible entry points. Let me share a strategy that many successful Florida investors use to get started. Instead of trying to buy the most expensive property you can afford, focus on cash flow positive properties in growing markets. Cash flow means the rental income exceeds all your expenses, including mortgage, taxes, insurance, and maintenance. When you find a property that pays you every month to own it, you've found a wealth-building machine. Here's a practical example. In a city like Lakeland, you might find a 3-bedroom, 2-bathroom house for around $250,000. With a 25% down payment, your mortgage might be around $1,500 per month. If that same house rents for $2,200 per month, you're generating positive cash flow from day one. Plus, you're benefiting from property appreciation as the area grows. But cash flow is just one piece of the puzzle. Florida's real estate market offers multiple ways to build wealth simultaneously. You have appreciation, which is the increase in property value over time. You have cash flow, which puts money in your pocket every month. You have tax benefits, including depreciation deductions that can reduce your overall tax burden. And you have mortgage paydown, where your tenants essentially pay off your loan for you. The mortgage paydown benefit is often overlooked by beginners, but it's incredibly powerful. Every month, a portion of your tenant's rent payment goes toward reducing the principal balance on your mortgage. Over time, this builds equity in the property, which is essentially forced savings that you can access later through refinancing or selling. Now, let's address the elephant in the room that stops most beginners from getting started: financing. Many people believe you need perfect credit and a huge down payment to invest in real estate, but that's not necessarily true, especially in Florida's current market environment. Conventional financing typically requires 20 to 25% down for investment properties, but there are alternative strategies. House hacking is one approach where you buy a duplex or small multifamily property, live in one unit, and rent out the others. This allows you to use owner-occupied financing, which often requires as little as 3 to 5% down. Another strategy is partnering with other investors. If you have skills like property management, renovation expertise, or market knowledge, but lack capital, you can partner with someone who has money but lacks time or expertise. These partnerships can be structured in various ways, but they allow both parties to benefit from Florida's real estate opportunities. Private lenders are also becoming increasingly popular in Florida's market. These are individuals or companies that lend their own money for real estate investments, often with more flexible terms than traditional banks. Private lenders are typically more interested in the deal's potential than your credit score, making them accessible to newer investors with good opportunities. Seller financing is another option that's particularly effective in Florida's market. This is when the property owner acts as the bank, allowing you to make payments directly to them instead of getting a traditional mortgage. Sellers might be motivated to offer financing if they want steady income, need to sell quickly, or want to defer capital gains taxes. But here's something crucial that most beginners miss. Location selection within Florida can make or break your investment success. Florida is a large, diverse state with distinct regional markets, each with different characteristics, growth patterns, and investment opportunities. South Florida, including Miami, Fort Lauderdale, and West Palm Beach, offers high appreciation potential and strong rental demand, but entry costs are significantly higher. This region attracts international buyers, which can drive up prices but also provides liquidity when you want to sell. Central Florida, anchored by Orlando and Tampa, benefits from tourism, job growth, and population expansion. The presence of theme parks, universities, and major employers creates diverse demand for rental properties. This region often offers the best balance of growth potential and affordability for beginning investors. North Florida, including Jacksonville and Tallahassee, provide some of the most affordable entry points in the state, while still offering solid growth prospects. Jacksonville is particularly interesting because it's the largest city in Florida by population and has significant port operations, military presence, and corporate headquarters. The Gulf Coast, including cities like Naples, Sarasota, and St. Petersburg, attracts retirees and seasonal residents. This creates opportunities for both traditional rentals and short-term vacation rentals, depending on local regulations and your investment strategy. Southwest Florida, including Fort Myers and Cape Coral, represents one of the fastest-growing regions in the state. Population growth has been explosive, creating strong demand for housing at various price points. This region offers opportunities for both new construction and existing property investments. Understanding these regional differences is crucial because your investment strategy should match the local market characteristics. A strategy that works in Miami might not work in Jacksonville, and vice versa. Successful investors adapt their approach to local conditions rather than applying a one-size-fits-all strategy. Let's talk about property types and which ones make sense for beginning investors. Single-family homes are often the easiest starting point because they're simple to understand, finance, and manage. They appeal to families looking for stability, which often means longer-term tenants and more predictable cash flow. Condominiums can offer lower entry costs and reduced maintenance responsibilities, but they come with homeowners association fees and less control over the property. They work well in tourist areas for short-term rentals or in urban areas for young professionals. Small multifamily properties like duplexes or quadplexes allow you to diversify your income across multiple units while still maintaining manageable complexity. If one unit is vacant, you still have income from the others. These properties also offer economies of scale in management and maintenance. Townhouses represent a middle ground between single-family homes and condominiums, often providing more space than condos while maintaining some shared amenities and reduced maintenance compared to detached houses. The key is matching your property type to your target tenant market. Families with children typically prefer single-family homes with yards. Young professionals might prefer condos with amenities close to employment centers. Retirees might want low-maintenance properties in communities designed for their lifestyle. Now, let's discuss the practical steps to get started as a beginner in Florida real estate investing. First, educate yourself about the specific market area where you want to invest. This means understanding local employment patterns, population growth, infrastructure development, and rental market conditions. Research tools are your friend here. Websites like BiggerPockets, Zillow, RentSpotter, and local MLS systems provide valuable market data. But don't rely solely on online research. Visit the areas you're considering, drive through neighborhoods, talk to local real estate agents, property managers, and other investors. Building your team is crucial for success. You'll need a knowledgeable real estate agent who understands investment properties, not just primary residences. You'll need a lender who works with investors and understands various financing options. A good accountant who specializes in real estate can help you maximize tax benefits and structure your investments properly. A reliable property manager can be invaluable, especially if you don't live near your investment properties. They handle tenant screening, rent collection, maintenance coordination, and day-to-day management issues. Good property managers pay for themselves by keeping properties occupied with quality tenants and maintaining the property value. An experienced contractor or handyman is essential for maintenance and improvements. Real estate investing involves ongoing property maintenance, and having reliable, affordable contractors makes the difference between profitable and problematic investments. Let's address some common mistakes that beginners make in Florida's real estate market. The first mistake is focusing solely on appreciation while ignoring cash flow. While Florida properties have generally appreciated well over time, markets can be cyclical, and properties that don't generate positive cash flow can become financial burdens during slower periods. Another mistake is underestimating expenses. Beginning investors often calculate potential returns based only on mortgage payments, but real estate investing involves insurance, property taxes, maintenance, repairs, vacancy allowances, and property management fees. A property that looks profitable on paper might not be once you account for all actual expenses. Emotional decision-making is another trap. Beginners sometimes fall in love with properties or get caught up in bidding wars, paying more than the investment fundamentals justify. Successful real estate investing requires discipline and objective analysis of each opportunity. Inadequate due diligence can be costly. This includes not properly inspecting properties, not researching neighborhood trends, not understanding local rental regulations, or not verifying rental income potential. Every mistake in due diligence can cost thousands of dollars later. Over-leveraging is particularly dangerous in real estate investing. While leverage can amplify returns, it also amplifies risk. Taking on too much debt relative to your income and assets can lead to financial trouble if vacancy rates increase, repairs are needed, or market conditions change. Let's talk about the current market conditions in Florida and what they mean for beginning investors. Interest rates have fluctuated significantly in recent years, affecting both property prices and financing costs. Higher interest rates generally reduce property prices over time, but they also increase the cost of financing, affecting cash flow calculations. Insurance costs in Florida deserve special attention. Property insurance rates have increased significantly due to recent hurricane activity and changes in the insurance market. This affects both your expenses as an owner and your competitiveness in the rental market. Factor realistic insurance costs into your investment analysis and consider this an ongoing expense that may increase over time. Florida's population growth continues to outpace housing construction in many markets, which supports both rental demand and property values. However, this also means competition for good properties can be intense, requiring quick decision-making and competitive offers. Short-term rental regulations have changed in many Florida markets, with some cities restricting or banning vacation rentals in residential areas. If you're considering Airbnb or similar strategies, research local regulations carefully and have backup plans for traditional long-term rentals. The construction industry in Florida has been active, but labor and material costs have increased significantly. This affects both new construction investments and renovation projects on existing properties. Factor current construction costs into any improvement projects you're considering. Now, let's discuss specific investment strategies that work well for beginners in Florida's market. The buy and hold strategy involves purchasing properties to rent out for long-term appreciation and cash flow. This is often the most suitable approach for beginners because it's straightforward, provides steady income, and builds wealth over time through multiple mechanisms. Fix and flip strategies involve buying properties below market value, improving them, and selling for a profit. While potentially profitable, this strategy requires more capital, construction knowledge, and market timing skills, making it more challenging for beginners. Wholesale strategies involve finding discounted properties and assigning the purchase contracts to other investors for a fee. This requires less capital, but demands strong marketing skills and deep market knowledge to identify good deals. The BRRRR strategy, which stands for buy, rehab, rent, refinance, repeat, allows investors to recycle their capital by refinancing improved properties and using the proceeds for additional investments. This can accelerate wealth building, but requires careful execution and market knowledge. House hacking, as mentioned earlier, involves living in part of your investment property while renting out other parts. This strategy works particularly well for young investors who want to start building wealth while minimizing their own housing costs. Let's explore the financial analysis skills you need to evaluate Florida real estate investments effectively. The first metric is cash-on-cash return, which measures the annual cash flow relative to the cash you invested. A cash-on-cash return of 8 to 12% is generally considered good in today's market, though this varies by location and property type. Cap rate, or capitalization rate, measures the property's annual net operating income divided by its purchase price. Cap rates help you compare different investment opportunities and understand whether a property is priced appropriately for its income potential. Cap rates in Florida typically range from 4 to 8%, depending on location and property type. Gross rent multiplier is a quick screening tool that divides the property price by annual gross rent. Lower multipliers generally indicate better value, but this metric should be used alongside other analysis tools rather than in isolation. The 1% rule suggests that monthly rent should equal at least 1% of the property's purchase price. While this rule is becoming harder to achieve in many Florida markets, it provides a useful benchmark for quick property evaluation. Internal rate of return considers the time value of money and all cash flows over your expected holding period. This more sophisticated metric helps evaluate investments where you plan to sell the property after several years of ownership. Let's discuss the tax advantages that make real estate investing particularly attractive in Florida. Depreciation allows you to deduct a portion of the property's value each year, even if the property is actually appreciating in value. This non-cash deduction can significantly reduce your taxable income from the property. Interest deductions allow you to deduct the interest portion of your mortgage payments, which is typically the majority of your payment in the early years of the loan. This deduction can make a significant difference in your overall tax liability. Operating expense deductions include property management fees, insurance, property taxes, maintenance, repairs, and other costs of operating rental property. These deductions reduce the taxable income from your rental property. Florida's lack of state income tax provides additional advantages for real estate investors, particularly those generating significant rental income. This means more of your rental income stays in your pocket compared to states with high income tax rates. 1,031 exchanges allow you to defer capital gains taxes when selling investment property by reinvesting the proceeds in similar property. This powerful tool allows you to upgrade your portfolio over time without paying taxes on each transaction. Let's address the risks involved in Florida real estate investing and how to manage them effectively. Market risk involves the possibility that property values could decline due to economic conditions, oversupply, or other factors. Diversifying across different areas and property types can help mitigate this risk. Tenant risk includes vacancy, property damage, and collection issues. Proper tenant screening, security deposits, and landlord insurance help manage these risks. Working with experienced property managers can also reduce tenant-related problems. Natural disaster risk is particularly relevant in Florida due to hurricanes and flooding. Adequate insurance coverage is essential, and understanding flood zones and hurricane risk patterns should factor into your property selection decisions. Interest rate risk affects your financing costs and property values. Fixed-rate mortgages protect you from rate increases, while understanding rate trends helps with timing decisions for purchases and refinancing. Regulatory risk involves changes in laws affecting rental properties, zoning, taxes, or environmental regulations. Staying informed about local politics and proposed legislation helps you anticipate and adapt to regulatory changes. Let's talk about building systems for successful real estate investing. Property management systems help you track income, expenses, maintenance requests, and tenant information efficiently. Good systems save time and help you make better investment decisions based on accurate data. Financial tracking systems help you monitor the performance of each property and your overall portfolio. Understanding which properties are performing well and which need attention allows you to optimize your investment strategy over time. Network building is crucial for finding deals, getting reliable service providers, and learning from other investors' experiences. Joining local real estate investment groups, attending networking events, and building relationships with industry professionals creates opportunities and resources for your success. Now let's discuss exit strategies, which are often overlooked by beginning investors, but are crucial for long-term success. Some investors plan to hold properties indefinitely, collecting rental income and building equity over decades. This strategy works well for cash flow-focused investors who want steady income. Other investors plan to sell after several years to capture appreciation and reinvest in larger or better properties. This strategy requires good market timing and understanding of local market cycles. Some investors use rental properties as retirement income, either keeping them for cash flow or selling them to fund retirement expenses. This long-term approach requires careful planning and consideration of how your investment strategy aligns with your retirement goals. Portfolio refinancing allows you to access equity from appreciated properties without selling them, providing capital for additional investments while maintaining your existing cash flow streams. As we wrap up this comprehensive guide to Florida real estate investing for beginners, remember that successful investing requires education, patience, and disciplined execution. Florida offers tremendous opportunities for wealth building through real estate, but success comes from understanding the market, making informed decisions, and maintaining a long-term perspective. Start with education and market research. Build your team of professionals. Begin with one well-researched property that meets your investment criteria. Learn from that experience and gradually expand your portfolio as your knowledge and confidence grow. The Florida real estate market rewards investors who do their homework, think long-term, and maintain financial discipline. Whether you're looking for cash flow, appreciation, or both, Florida's growing population, business-friendly environment, and diverse markets provide opportunities for investors at every level. Remember that real estate investing is a business, and like any business, it requires dedication, continuous learning, and professional management to succeed. But for those willing to put in the effort, Florida's real estate market offers one of the best opportunities in the country to build long-term wealth through property investment. The key is to start now, start smart, and stay committed to your long-term investment goals. Florida's growth story is still being written, and there's still time to become part of it as a successful real estate investor.